Hi traders, it's Roberto. This is another tutorial for the mentorship program, and today's topic is price action. How to recognize reversals using color change candles, two stochastics indicators, time of day. We're going to be focusing first on the 1 hour chart, and then we'll switch over to the 4 hour and daily chart. So let's get started. This is the Euro Yen 1 hour chart, and this is the latest activity what we see here. The first thing I do is to qualify is that I count the number of pips before a color change candle. And the market moved down about 250 pips, and that certainly qualifies since the Euro Yen's daily range is about 150. And then I look for that color change candle, and it's here. And then I see that we also have a pin bar, and this pin bar is larger than the previous candle, so that qualifies. Then I look at stochastics to see if it confirms what I see in the color change candle and if it's confirming this pin bar, and it does. The settings on these two stochastics indicators are 2133 and 14.3 and 3, and I like to see them both mirroring each other, so they're both oversold. So I enter a trade on the next candle. Since I don't need to qualify a color change candle, I'm qualifying this based solely on the pin bar. It's a nice kangaroo tail. It is larger than the previous tail, so it does qualify. Not only that, we have a false break. So there's several reasons to take a trade at this area. First, we found support, support, support. If you draw a line across the body of the candles, and that was a support level. Now this candle initially broke below, but the body closed inside, so that qualifies as a false break. It is also a kangaroo tail, and it is also a color change candle. So we have many reasons why this trade would work. First, the market had put in over 250 pips prior to the color change candle and the false break. Stochastics indicator is oversold on both the 21 and 14. We take a trade on this candle, and as you can see, if you look at the chart, we're up about 44 pips on this pair already. Okay, let's move on. Let's find some more setups. We have price come down to that's about a 300 pip run from this swing high to this swing low. We have several reasons to buy at these levels, and let me just go over a few of these. First we have a false break. Market shot down but closed inside this candle. We have also a color change candle here, and again stochastics indicator is oversold on the 21 and 14. Okay, so we have, and then what happens is this candle turned into somewhat of, it's not the prettiest morning star, but we have one candle, huge bearish candles, and then we have indecision in the middle, and then a huge bullish candle, and it came up all the way up to it recovered all the losses from the sell-off, and this creates a morning star. So morning star, excuse me, stochastics indicators oversold. We enter a trade either on a little bit of a pullback, because after the market creates these patterns, oftentimes the market pulls back, and this is a great entry around these levels, and price went all the way up for 164 pips. Then what happened? We had a color change candle. Market goes up. If you take the swing low to the swing high, over 235 pips, which exceeds its daily range. This is a green candle, so it's two consecutive green candles followed by a color change candle, and then you would enter a trade on the next candle here, 8 pips below, and the market came down close to the previous low, which was about 117 pips. Now I qualify the trade. I've got a color change candle. I've got stochastics indicator both on the 21 and 14. overbought, and there's your trade. Now this trade did qualify, but stochastics indicator was not oversold. So you could have just skipped this trade, but even without stochastics, this trade actually worked for a few pips, and it went up 90 pips. We have a color change candle. Price went up 8 pips prior to the previous candle, and like often, price does retest the lows, and it retraced about 50% of this candle, and it went up about 126 pips. Now, this trade, it would be a different entry, and again, using price action techniques. It's a little bit late of an entry, but it still works. So this is an inside bar. So the body of the candle is inside the body of this candle. There's two strategies. You can use the whole wick and body to determine the length, the top and bottom of the mother candle. You can also just use the body. So the body of this candle was inside the body of this candle. So I isolate the body of this candle. This is called a mother candle. So we have another inside bar, the body is inside this body, and then I just wait for the market to break below and close below this mother candle. Unfortunately, you would have gotten in quite late on this trade, and you still would have made some money on this trade. It did qualify, and it went down about 80 pips. So that's another strategy, using an inside bar. When I see large candles like this, I know I'm going to enter the trade late, but it still qualifies, and the market did break below and continue to go down, and it went down about 80 pips from the entry. Okay. Let's scroll back and see if we have more trade setups. Some of them are extremely easy and extremely high probability. Others are a little bit more difficult, depending on the time of day. And I forgot to go over the time of day, I'm sorry. This here was the New York, the London close, and this was the New York close. So between 11 and 12, you should be looking out for color change candles and change in direction. This was the London Open. Price shot up and just turned around and went south. And this was the Tokyo Open, where we had color change candle, and the market turned around and went south. And let's go, and this trade here was the London Open, and price had basically shot down all night throughout the Asian, and then stalled out around the London Open, and then turned around and went north. And then here was the New York close, and then we had a change in direction. This here was around the London close. Going into the New York session, we have 1, 2, 3, 4 green candles followed by a color change candle. This is a lot easier of a trade. And this color change candle happened to be not only a false break, but a pin bar larger than the previous candle. So this qualifies. So that's number one. Number two, stochastics indicator is overbought on both 21 and 14. And we count the number of pips prior to this candle change. And here's the beginning of the day. Price went up 152 pips. As long as price moves more than 100 pips, then yes, then you start looking for entries based on color change candle, the type of candle, and we'll go over a few different types of reversal candles. But definitely the pin bar, the kangaroo tail, qualifies as a reversal candle. You just need confirmation. The confirmation was the stochastics indicator was overbought on the 21 and 14. And it is the London close, so that would be a great trade to take. 127 pips. And if you would have stayed in this trade, of course, in hindsight it looks great. Went down 300 pips. Okay, let's go and look at some more. Let's hunt for some more entries. Here we have the beginning of a new session, Asian. We had 2 red candles followed by color change candle. And there's two ways to trade this. It's always, if you know your candlestick patterns, sometimes you'll see 3 or 4 reasons to take a trade. Now, this is an inside bar. The previous bar, you take the whole candle, top and bottom, including the wick. Here, we've got an inside bar. And all we needed was price to break above this cluster of support. And there it was. There was a breakout. And you could enter a trade on the next candle. At the time that candle formed, stochastics indicator again on the 21 and 14 was oversold. So we have confluence of indicators, several reasons to take a trade, and this is what you need. On this trade, we had several reasons. Number one, we had a pin bar. Number two, stochastics on the 14 and 21 was overbought. And number three, we had a color change candle. Okay, let's move on to the trades that I look for, usually at the beginning of a session or at the end of the session. So if we have the beginning or the end of the Tokyo session, the beginning or the end of the London session, or beginning of the New York session, those are the areas, the best trades take place around that time. And some days you're not going to find that, so you just have to be extremely careful which trades you take and be extremely picky which ones are valid. Now this one here, very easy. We have not only have a color change candle, we have 2 wicks, we have a pin bar, and stochastic is overbought on both 21 and 14 moving average, or rather, sorry, stochastics indicator. So this is the end of the London session, London close, and we have clearly a reversal pattern. And then on the other side, we have a pin bar, a false break at the beginning of the London session. And stochastics indicator is oversold on both the 21 and the 14. So again, confluence of indicators. We don't have a color change candle on this trade, but we have, and if you look at the previous day, we have support, price. This is considered a false break, where if you draw your line around here, this is the support. Price tries to penetrate the previous support, previous day, fails. The body closes inside the body of the previous candle. Stochastics oversold, 14 and 21, and we take a trade on the next candle. That's how to trade false breaks. So we have several strategies. We have false break candles, we have pin bars, we have color change candles, we have inside bars. So this is price action. These are the techniques that we use to determine when market is completely exhausted, one direction or another, and we take a trade in the opposite direction. And oftentimes we're not too concerned about directional bias, because the markets are pretty much a roller coaster ride. What we're looking for is exhaustion. Are the markets at the time of entry, are they completely exhausted? Are they completely oversold or overbought? And we use 2 stochastics indicators to help us determine, yes, if price it is overbought and oversold. And then we use candlestick patterns, price action techniques to recognize these reversal patterns. Okay. Here we have another candlestick pattern, and these are 3 wicks. This is called, you can use these tweezer tops. So they're wicks that are equal in length. Now, I need confirmation. So that's, not only do we have a color change candle, the 1, 2, 3, 4 green candles, followed by a color change candle. And that's one strategy you can use, though your entry would have been down here instead of here, because I would have taken the trade using tweezer tops. 2 wicks, almost equal in length. That's one reason. The second reason is we have stochastics indicator, again, overbought on the 21 and 14. Now, prior to the tweezer top, the market started down here, and it moved over 100 pips from 131.70 all the way up to 132.29. Okay, so that qualifies. Not only that, we have several reasons price would not go beyond the previous support, or rather previous resistance of the previous day. Here, that resistance held, stochastics overbought, color change candle. So there's several reasons why you would want to sell at these levels. Okay. Oftentimes, we see this move up and we think the market's going to take off to the moon, and we don't look at previous resistance levels. We don't look at color change candles. If we don't know what tweezer tops are, then it would be difficult to place this trade. And when you see exhaustion, you notice here we have a strong green candle, another strong green candle, and then more green, green, green. But what happens is that the candles start getting smaller. The bodies of the candle start getting smaller, which means there's not a lot of demand up at these levels, especially at a previous resistance level. Okay. Let's just move on and see. Here is an interesting setup, and again, stochastics indicator oversold, color change candle. We have a false break. We have an inside bar. So there's many reasons why price would probably not extend, its bias sentiment because of these candles. And let's just count them, okay? Because there's many reasons why the market would not penetrate this level. Number one, stochastics again oversold on both the 14 and 21. Number two, we have an inside bar here. Number three, we have this candle tried to penetrate the support and it failed. So that qualifies as a color change candle, a false break candle. And typically what we do when we see false breaks, notice that this candle at one point was a solid candle, but the bulls pushed price up and it closed inside the support level. And this was the support. If you look at the bodies of these two candles, we have a color change candle which signals that the market most likely will turn around and head north, but we need more data, we need more information. Well, the stochastics indicators were oversold, and then this candle was the key because it tried to penetrate the swing lows and it failed, giving us a false break. And you automatically enter a trade on the next candle. You don't even wait, and your stop loss would be beneath the swing low. And that was more of a 100 pip run. Okay. False breaks are very, very powerful price action patterns. Okay. Here is another trade setup where we have two green candles followed by a color change candle. And we automatically sell 8 pips below. At the time of entry, stochastics indicator, had reached 80. It's around here, both the 21 and the 14. Okay. So let's see if we can find any more trade setups, but we'll look at some other pairs here. I'll do one more on the euro yen, and then we'll look at a few more other pairs just to show you these trade setups that you see on the left-hand side that I took based on price action techniques. Here again we've got stochastics indicator oversold, both on the 21 and 14. The time of day is the London Open, and here's the London close up here. So in the London Open we have a color change candle, and then we would take a trade 8 pips above this close of this candle here, and the market went up from 127.67 all the way up to 128.47, so over 100 pips on that trade. Okay, then the London close we have a color change candle. This was the Tokyo Open, and it sold off, recovered for London, and turned around and went north. And remember, we had talked about from session to session, markets generally change the direction, and this is what happened. From Tokyo going into Singapore sold off. The beginning of the London session turned around and went north, and then at the end of the London session, this particular day, price retraced. Okay, so Asian, London, close of London, New York session retraces. Okay, so again we have a color change candle at London close, and we place a trade 8 pips below, which was about here. And you would have needed more patience on this trade because it took a while before it, you would have been in profit on this trade. And it's because it's the end of the day and there's very little volume. You can tell by the size of the candle. There's no strong candles like here. This is a session, and the market shoots up and does its daily range, its true average range, and then turnarounds and retraces. And this is like a 50 pip retracement. Okay. So let's look at the other pairs, the other trades that were taken that you see here on the account. And again, let me just add the indicators. 21 and 14. And here, pretty much mirrored what we saw in the Euro Yen. Stochastics indicators oversold. We have a color change candle. It turns into a nice, not only a false break because the market was finding support at these levels, and then this candle at one point was a solid red candle and it turned into a green, nice pin bar. Previous candle was smaller, so that qualifies. So you would enter a trade on the next candle, and that's what I did, and that's the Euro Yen, and that's what you see here, currently up 30 pips on this trade. Let's look at some more. This trade here was excellent setup because not only did we have a color change candle, stochastics indicator was oversold on both 21 and 14. Okay, right there and there. And that was a great trade setup. And for retracement, how many pips prior to the move? Over 280 pips. For the USD yen to put in that many pips is extraordinary because it normally only puts in maybe 100 pips on an average, and here put 3 times its daily range, so you needed a substantial retracement, which it did, 168 pips. So that would have been a great retracement. If you missed this rundown, then you could have caught the retracement. And of course, we're still in a downtrend, so what you would have done, the next logical step was to look for a color change candle and anticipate the market to resume its trend, and there it was. Stochastics again overbought on both 21 and 14, confirming this pattern with a color change candle going in the opposite direction, and it went down of 162 pips. So this for the past 2 days, I was lucky enough to capture these trades, but you have to be at the computer if you're going to be trading off the 1-hour chart. So how do you do that? Well, number one, check at the top of the hour and check at the beginning and the opening of each session. So this is Asian, this is London, and this is the end of the New York session. Going into the next day, price sold off, and this is the end of the New York session where we found this nice pin bar, and it is a counter trend trade, and we're not interested in staying in this trade for a very long time, but we just want to capture the retracement from this swing high to the swing low, which is 187 pips, so we should be able to capture at least 60 or 70 pips to the upside. Okay. There are several trade setups on this pair. Here again we have a pin bar, color change candle, again stochastics indicators overbought on both 21 and 14. It is the end of the London session and the market sold off. Okay, so the other trade was the pound yen. We took 54 pips so far. We're up on this trade. And it's the same thing. We've got stochastics indicator, both on 21 and 14 are oversold. And it's the same scenario. Oversold stochastics. Price was, sorry, these are wrong. New York close is actually up here, and this is the London close, which is around 10 or 11. Actually, it's a little bit late because right here when price found support, this was the London close. Then it made one last attempt to break the support. This candle turned into a false break. Notice it happened at a previous support from the previous day, Thursday. Stochastics oversold. We take a trade, and we're currently up 54 pips on that trade. Okay, that's it for the 1 hour chart. Let's look at trades on a higher time frame, 4 hour and daily charts. It gets really exciting when you can see these setups using basically the same principles. 21 and 14 moving averages, 14, 21 stochastics indicator, price action, previous support and resistance levels. And so let's look at a 4 hour chart on the pound yen. Okay, we're looking at a 21 and 14 stochastics indicator on a 4 hour chart, and we're going to use price action and the indicator. Not so much a color change candle, though. If we do see a color change candle, then we can qualify that. But I'm looking more at price exhaustion. I'm looking for a specific candle pattern on the 4 hour chart. Now, this tutorial is running a little bit long, and I didn't want to make it more than a half an hour, so I'm going to cut this session, just explain the trade patterns on the 4 hour chart, and then part 2 will be on another video. So let's look at trade setups on the 4 hour chart. Notice here price shot up, and here we have a cluster of support, or rather resistance. 3 wicks, which qualifies as a reversal. Stochastics indicator again. You're looking for price action patterns and using stochastics indicator to qualify, or rather confirm what you're seeing in price. So, if you look at this area and see, okay, what was the market doing prior to this move, and why we do have a color change candle, which gives us the alert that price is no longer interested in printing new highs. But we also need to see how many pips prior to the move, 300 and almost 400 pips for the past few days. So this is May 7th, this is May 10th. And when looking at color change candle, we have the doji. So we have several reasons that price would not penetrate these levels based on 1, 2, 3 wicks within a 4-day or 3-day 4-day area, and then price does collapse. So that I would enter a trade at these levels because we have price rejection. That is our price action technique. We've got price rejection 1, 2, 3 times. Enter a trade either at the break at this bearish engulfing candle, and enter a trade on the next candle, which is a bit late, and I would have rather enter the trade. There's 2 places you can enter a trade. When price breaches these levels at 156.67, which was a previous resistance level, that would be one technique. It's more aggressive because you don't know if price will break through these levels. But looking at stochastics on both 21 and 14, it is highly unlikely that price would continue to go up at these levels, especially when it's printed a color change candle. Notice 1, 2, 3, 4, 5, 6, 7 green candles followed by a color change candle. That was our first signal. And then our stop loss obviously would have to be above the swing high. And what markets generally do, they retest highs, and it did and failed. That would have been a stronger clue. We have 2 clues that markets would not penetrate these levels. Stochastics still overbought, never came back down. And then you could have entered a trade at these levels with a stop loss. And of course, with a 4-hour chart, you would have to increase your stop loss to 50 or 100 pips and enter a trade at these levels, and then that would have been about 138 pips. Now, the second thing I would have done is scroll down to the 1-hour chart and see what activity is happening, what price action techniques are visible in the 1-hour chart, and you could have entered on the 1-hour chart. But you look at your 4-hour chart and see if there's a reversal pattern, and then scroll down to the 1-hour chart for your entries. The same thing that we did here we were looking at the 4-hour chart on the pound yen, and this was a previous resistance level, a huge pin bar, which is a reversal pin bar after a long run, and we took a trade on the pound yen on the 1 hour using stochastics oversold on the 1-hour chart plus a pin bar. So that would qualify. If you look at this color change candle, then all you need to do is scroll down to the 1-hour chart and see if there's a level of support and a color change candle, price action techniques that you can take around the shaded area. This whole cluster of support or price obviously does not want to print any lower than this. Okay, and it's starting to respect. We're starting to respect the swing low over here, and it tried to but failed. So this is why we took that trade. Let's look at some more trades on the 4-hour chart. So what I like to do is find setups on the 4-hour chart, then I scroll down again to the 1-hour chart and see if I see a setup. Okay. So this is a very strong sell-off, followed by this nice pin bar. Stochastic indicator is oversold. It's not the prettiest pin bar. I'd rather not have a long wick above that, but it is a strong rejection. Okay, this is a long wick from here to here, and I'm thinking, okay, the market's already printed how many pips from swing high to swing low? Over 750 pips. Stochastics is oversold at that point, and it's also, look, we have the strong support level here that it's, market has the memory and it's bouncing off the support. So it comes out to that level, and then what do? Well, it's not exactly a color change candle, and should we take a trade down at these levels? Because this wick is so long, and it's about 156 pips, I would have definitely taken the trade on the next candle, seeing that when you see long wicks, those are extreme rejection areas. And if you can use stochastics as confirmation that the market's oversold, this is a good trade setup. Again, price action techniques. Very long wick, price in this instance never went below. And in fact, the next candle started printing above the close of that candle. So let me make it bigger. Notice the close of this candle, price started going above the body. So that would be your signal to buy. Stochastics oversold. We don't have a color change candle, but what we do have is price exhaustion at a previous support, and the next candle printing above this sort of doji. Okay, like here we have a doji, and that's an indecision candle. So the next candle, what happened? Tried to penetrate the support and failed and closed above the body of the doji that closed. That would have been a great entry. Okay, these are price action techniques, just using candlestick patterns and having stochastics as our support or confirmation level. All right, this is a much easier trade setup on the 4-hour chart. We obviously have an inside bar, so we isolate that candle. This is the mother candle. This is your inside bar, and as soon as the body closes below the mother candle, which is here, then we enter a trade. Now, is stochastics overbought? Yes, on both the 21 and 14. Okay. Now, these trade setups on the 4-hour, these are not 10 or 20 pip runs. We're talking about more than 100 pip. and this certainly moved down over 100 pips. So market prior to the move down, it started all the way down here on April 4th, and by April 11th, 7 days later, it gave us a nice color change candle followed by a break below the mother candle. Very nice run. It's over 600 pips. So this is what we look forward to when we place trades based on the 4-hour chart. Now this one here, this is a gift really, because this is based on the BOJ intervention, and this is a news event trade basically. So we would isolate the highs and the lows of the previous few candles, which is here was about basically about 24 hours of activity, and then we would just straddle this and place a trade above, a buy stop above the swing high, and a sell stop below the swing low, and almost immediately you would have been up 200 pips on this trade. Stochastics was oversold at the time of entry, so that was even better. Okay. On news events, it doesn't matter what Stochastics is doing as long as you straddle price action. You take swing highs and swing lows and place orders above and below. Okay. So I'll stop this video now. In part 2, we'll continue the 4-hour and daily price action techniques.